Welcome back to another video. As you all from thumbnail have cleared that why this video is for the fundamental and detailed analysis of Infosys share. As you can see that in last 4 months the stock has given almost around 15% return, which is a fabulous return within just the span of 4 months. In 4 months the stock has given around 15% return. And why is that case? As you have all know that here the stock price has corrected almost 11 to 12% in one day, and again during the quarterly result stock has again corrected of 9 to 10% in a single day. Still, why the stock has moved from this correction point to this point of 15% return? So we will discuss about all these reasons and why the stock is not giving such higher performance as after COVID level. Well, behind this there are two major reasons for which the stock has given a fabulous return of 15%. As you all know that the management has given a very bad revenue cut, a forecast of 1 to 4% in upcoming quarters and annual return of company revenue. But still, why this stock has given? So this is because of two news which come around during the recent past. So there are first news that the company is trying to build some AI ability to cater its customers and to provide best service to its customers. And the recent news which around last week was that the company has secured a deal of $1.6 billion, which was with Liberty Global. As you can imagine, that's the growth of the stock in upcoming years, which has secured that this higher amount of deal with one single company of Liberty Global. As you can see that this stock is moved from here to here in just 4 months. So this is the two major reasons for which the stock has given such fabulous return, and why this stock is not going as it has gone previously just after COVID quarter and COVID war. Within just 1 to 2 years, 1.5 years, the stock has given almost 200% return. So why now the stock is not giving this much of amount return irrespective of the higher revenue growth and higher profitability growth? So why is that the case? And why the whole entire IT index is performing very bad in this segment? As you can see that TCS, Wipro, Tech Mahindra, all the stocks which are in IT, Nifty IT, all are performing very well, just because that the revenue which comprises of majority from US and Europe countries, as these countries are facing a depression situation where the economy is facing very bad situation. So there are very lack of demand in service sector, IT sector. So that's why the company is not performing that much well and not growing that much well, and the margin is affected due to such reasons. So you have to consider all these facts and whether this will continue further or there is any possibility of further upward movement like as it has given in previous quarters and previous years. So we will also discuss the key fundamental parametrics, whether there is any specific inefficiency or deficiency in the stocks, or it is just because of that whole economy deficiency and whole IT index. So before moving into video, let me give you a quick disclaimer that I'm not a SEBI registered investment advisor or research analyst. The content posted on this platform is purely for educational purposes and none of it constitute investing or trading advice. You should do your own research and diligence before investing or acting on the information presented. Before moving into some fundamental analysis, here is the investor presentation of Q1 24. As I said that earlier, why this stock is lagging behind, although there is some other stocks in Indian market in Nifty 50 performing very well, while TCS and Infosys are falling very badly, just because their revenue is coming basically from North America, US and Europe, and from India there are only 2.7%. So this is the key reason why the stock is falling. As you see that there are very bad news about the global market of USA and Europe. There are very chances of inflation, depression. So when this will calm down and there will be normal in global situation, this will move upward, as the service demand in these countries are very low, which is almost around 18% of total revenue. That's why this stock is performing very bad. And if you see that revenue distribution segment wise, This is a major segment of financial services, which is almost banking, insurance, financial BFS service sector of almost around 30%, 28%, and in consumer packets 14%, communication 11%, 12%, 3% others, 7% in life science, high tech, and manufacturing. So all these combined it's 100% of and serving 185 of global Fortune 500 companies. So basically, global Fortune 500 is company is of top 500 company, and it is serving from those 500 to 185 global Fortune companies, which is a very good. Another important thing here that the stock has generated a AI solution program which is called Topaz, which is now participated in combination with some major companies of around $2 billion investments to improve this, accelerate growth, and build connected ecosystem, unlock potential efficiencies in scale. So offering including generative accelerate business value global enterprise. Here we will discuss a fundamental analysis and peer comparison, corporate governance and dividend payments, and other some key fundamental performance like profit growth, revenue growth, balance sheet, cash flows. Everything will be discussed in detail. So here the stock has 52-week high of 1672 and low of 1185 rupees, and this company is having market capital of 5,82,606, which is second largest IT company in India. Here number of shares as 415 crore. The PE is having 23.95, which is around 24, which is very low. As you will see that in later there are so many other IT sector companies which have a significant high value P, but this has very lower P, very attractive valuations. Here dividend also paying of 2.42%. Company has also a cash of 6,500, having zero debt, and promoter holding of 15% around, EPS of 58.60, and sales growth of 19%, return on equity 34%, return on capital employed 46%, profit growth of 9.57%. As you can see that price chart, the stock has not that given so much amount return from here to here, just only 14% CAGR. As you can see that in 1 year there are negative return of minus 10.8%, which is due to revenue guidance cut and some margin decline in this IT sector. And as I earlier said that this stock is having a very lower P. As you can see that the P has around only 23, 24, which was previously around a touched high of 40. Can you imagine 40, which is almost double from this point, as this is currently trading around 20 to 23, which is previously COVID valuation. That's why I am saying that this stock is looking very attractive for investing perspective. Let's do some peer comparison of some leading IT sector companies, which having Infosys is having second position and TCS is having number one positions, having market capital of 12 lakh. On the other hand, Infosys has 6 lakhs, which is very high market capitalizations, having second largest IT sector. Again after that, TCS, HCL, Wipro, LTI, Mindtree, Tech Mahindra, and L&T Technology Services. Now let's talk about the PV ratio. This stock has around fairly well PV ratio. As you can see that there are almost around 14 point in TCS, 7, 4, 9, 6, 9. So it's around very average PV ratio. And if you see that P ratio, which is price to earning ratio, of around only 23.95, which is almost low in this whole sector. As you can see that a leading company TCS has 30, and this is very much lower than this. And EPS was also a very healthy EPS. Return on capital employed is also very high. As you can see that after TCS, this has the only highest return on capital employed. So it satisfies all the fundamental characters and fundamental parametrics among all the peer performers. Now let's check about the ratios of key ratios of these stocks. You can see that sales growth is consistently increasing of 5 year average of 14.89, which is around 15%. Profit growth is of around 8%. Return on equity is of around 28% in last 5 years. The return on capital employed is also around 37.8%. Now let's see the quarterly performance of this stock of previous 7 to 8 quarters. As you can see that from March 2021 up to March 2023, in 2 years the revenue has significantly increased from 26,000, 28, 30, 32, 32, 35, 37, 39, 38, which is very good performance in terms of revenue in quarterly performance. And if you will see that net income is also from 5,000 to rise to 6,128, which is almost around 20% in just 2 years. EPS has also increased from 11.96 to 14.79, which is very healthy growth in quarterly performance. Now let's check the annual performance of this company. From 2015, the revenue has increased from 56,000 to around almost 1,49,000, which is almost around 3x improve in terms of revenue growth. And in the net income, you will see that from 12,000 to 24,000, which is double in just 8 years of time horizon. And you see that here that EPS increased from 27 to 57.986, which is more than double. And dividend per share TPS is also consistently increased from 14 to 12, 21, 21, 17, 27, 31, 34. So also company is also paying a healthy dividend. And as you can see here, the dividend payout ratio is of almost around 60%, which is a very good thing. The company is paying very good dividend. Now if you will see that the price target of this from 1 year forward EPS earning based, so on higher side this can go up to 1848, on average target this can go up to 1457, on lowest side this can go up to 1141. So there are very less likely chances of slowdown in stocks, although the stock can move like this in near term, but still there are some possibility this will go upward in a longer horizon time. Inflation, all these control will be in USA. There will be a positive sign of growth, so you can expect a good return in a long period. That is why you need a patience of holding this stock for very long term of 3 to years, 5 years. That then that case you will earn a more return than this. So this is very promising stock, as there are lot more confidence in terms of shareholding pattern. As you say that the promoter and the DII, FI, all they are increasing, mutual fund, all they are increasing stake. Why? Just because that they are estimating that this stock will go forward, move in upward. So you can consider about, and you should do your own research and analysis before investing. Thanks for watching. See you in next video.